Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 24th, 2025, and we're diving into the latest earnings report from Deckers Brands, a global leader in innovative footwear, apparel, and accessories. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Deckers Brands has just released their second quarter fiscal year 2026 results, and there's a lot to unpack, from revenue growth to strategic brand performance.
Revenue and profitability overview. Let's start with the top line. Deckers Brands reported a net revenue of $1.43 billion for the second quarter of fiscal year 2026, marking a 9% increase from the previous year. John, what are the key drivers behind this growth?
The growth is primarily driven by the strong performance of their HOKA and UGG brands, which saw double-digit growth. HOKA's net sales increased by 11.1% to $634.1 million, while UGG sales rose by 10.1% to $759.6 million. This reflects the brand's strong market presence and consumer demand.
And what about profitability?
Deckers reported an adjusted EPS of $1.82, which is a 14% increase from last year. This is a significant beat against the analyst's forecast of a 58 cents, based on a survey of 8 analysts. The company's ability to expand its gross margin to 56.2% from 55.9% also contributed to this profitability boost.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. How did Deckers manage their expenses this quarter?
Deckers' SG&A expenses were $477.3 million, up from $428.2 million last year. Despite this increase, their operating income rose to $326.5 million, showcasing effective cost management. The company is leveraging its best-in-class operating model to maintain profitability.
Looking ahead, what is Deckers' outlook for the full fiscal year 2026?
Deckers has provided a robust outlook, expecting net sales to reach approximately $5.35 billion. They anticipate their EPS to be in the range of 6.30 to 6.39 cents. This guidance reflects their confidence in continued brand momentum and operational strength.
Brand performance and strategic initiatives. John, can you elaborate on the performance of Deckers' key brands and their strategic initiatives?
Absolutely. HOKA and UGG are the standout performers, with HOKA's sales at $634.1 million and UGG's at $759.6 million. International sales surged by 29.3%, highlighting their global expansion strategy. However, direct-to-consumer sales saw a slight decrease of 0.8%, which the company is addressing through enhanced digital strategies.
What strategic initiatives are they focusing on to drive future growth?
Deckers is focusing on product innovation and expanding their digital footprint. They're also investing in marketing to strengthen brand loyalty and capture new markets, particularly in international regions where they've seen significant growth.
Capital allocation and shareholder returns. Let's discuss Deckers' capital allocation strategy. How are they returning value to shareholders?
Deckers repurchased approximately 2.6 million shares for $282 million during the quarter, with a weighted average price of $109.31 per share. They still have $2.2 billion remaining under their stock repurchase authorization, indicating a strong commitment to returning value to shareholders. Their cash position remains robust at $1.414 billion, providing flexibility for future investments.